So good morning, good afternoon if anyone's right now talking with us from Europe, and thanks for joining the webinar. So as Stephen, first of all, thank you very much for the introduction, and also, with regard to the 10 things, I know that I, for one, am probably thankful for taxes because that is obviously one of the veins for the existence of this company. Bottom line is that these last few months we've been hearing a lot about, much talk about taxation of e-commerce transactions. Everyone knows that it's coming, just the question is not so much will it come, but how soon will it come? We'll talk a bit today about the environmental state, statutory and business of what's happening with regard to e-commerce and taxation of e-commerce. And then we'll proceed to describe in a bit more detail about Exactor, what our service is, what our offering is in general, and then we'll drill down to actually how the Exactor module, which is really fully integrated thanks to Commerce Guys into both Kickstart and Drupal Commerce, and we'll look at the Exactor module and see how it can address your compliance needs so that we can really, you can be rest assured that your taxes are taken care of and allow you basically to focus on the business. And as Stephen mentioned, we're definitely open to answer any questions that you might have at the end. So the first question is, why bother with sales tax? The bottom line is because we have to. I'm going to talk over here about the merits or disadvantages of taxes in particular, and obviously not about sales tax. But as Ben Franklin said many, many years ago, the only thing certain in life is a death and taxes. So the question isn't whether we need to pay the taxes, but the question is what is just the form of the taxes. And assuming that sales tax is one of those given forms of taxes, the question is we need to ask is the internet a tax-free zone? And I don't think anyone in their right mind really has that opinion. I mean, why should taxes not be imposed on e-commerce transactions, or why should they be imposed only on some e-commerce transactions and not others? The only reason why people don't collect taxes today is because they can get away with it. And for obvious reasons, what we're seeing is that the governments in recent months, in recent years basically, are trying to neutralize really what is a technical loophole and nothing more. So people can not collect taxes because they can get away with it, but the emphasis for now. So where are we? Why are we in this situation? Where did this loophole come from? Many people associate the loophole with what's called the Tax Moratorium Act that was enacted back in 2002. And that's an inaccurate assessment. The Tax Moratorium Act, just briefly, was enacted by Congress really for the specific purpose of not allowing governments to impose new taxes on the internet. This was, just by way of background, this was in the heydays of the internet when people didn't really understand what is this new frontier. They didn't understand what all these new concepts that were coming up, and really sort of just by way of example, one of the more notorious ones was a proposal for the bit tax. In other words, states were looking at the idea of taxing bits of information that were being transmitted through the wires that were going through their states. It's sort of like taxing a passenger for the right to fly in a commercial plane above the state. Just imagine what this would have done, what type of tax burden this would place on your flight from New York to Los Angeles. So with this movement, basically, with the tax moratorium, Congress put a halt on these new taxes. But sales tax is not a new tax. It's been around pretty much forever, for nearly 100 years. And so therefore, it does not come under the tax moratorium. The lack of taxes in the internet stems actually from a Supreme Court ruling known as the Quill case back in 1992, which basically says that states cannot enforce their rules unless there's a strong connection to the state, which is known as nexus. The court said this because the court was of the opinion that it would place what was known as an undue burden on businesses. Essentially, it would be very difficult to track the rates and rules of all the different taxing jurisdictions in the U.S. unless there was a technical feasible solution. The court said that the states would not be able to impose their taxes on businesses unless that business was subjecting themselves to the rules of the state. Bottom line is that makes sense. So the obligation to collect sales tax exists. What was missing is the ability to enforce. And what happens is, because the court basically said that that the ability to enforce is a function of what they call nexus, then the question is the interpretation of what this term nexus is. So physical connection, that's a given. However, and one important case, for example, that sort of emphasized this was the Borders case back in California in 2003, where Borders was basically found liable for a large fine and penalty for taxes they didn't connect. What the court said at the time was that what Borders did was created a separate entity for e-commerce transactions, separate from all of its physical stores. But the court basically said that the creation of this separate entity doesn't shield the company from the nexus that's created by the physical stores. The fine and penalties that was imposed by the California Court of Appeals, together with the back taxes that Borders had to pay out of their own pocket because they couldn't go back to the customers, really was probably the first step in the beginning of the demise of Borders. And more recently, we've seen, many of us have heard probably about Amazon law. And that's the Amazon law is actually a good example of how states have become very innovative with how they interpret what the term nexus, to how to extend it to basically to the non-physical connection. So back in what the Amazon law was back in 2009, the state of New York passed a law that essentially really was geared at Amazon. What this law said is that nexus is created if the online merchant accepts advertisements from the locally based advertisers. So even though Amazon didn't have any actual physical premise in New York, because they accepted advertisements from New York-based businesses, and the New York law basically found that created the nexus. Amazon's reaction, they went ballistic. They fought the law. They pulled at the beginning all the New York advertisers. They went to court and they appealed. And actually, interestingly enough, just a few weeks ago, their final appeal was denied by the U.S. Supreme Court, essentially making the New York Amazon law non-appealable. Many states followed New York and enacted actually rules that are very similar to this Amazon law. Amazon, interestingly enough, is taking advantage of this situation to create actually a new business model. So what they've been doing over the last couple of years, they've been negotiating with all the different states that passed these Amazon law. They negotiate building and creating local distribution centers, promising basically to bring lots of employment to the different states, and essentially getting a deferral of their sales tax obligation by a couple of years. Interestingly enough, though, it's not just the creation of the distribution centers. Now what they're doing is they're using these distribution centers to be the hub of their new business model that's going to focus around same-day delivery. So we can see a direct correlation actually between the sales tax into how that actually could impact companies like Amazon, and how they can use it for their benefit. So all this leads to what we've been talking about recently about the Marketplace Fairness Act. What the Marketplace Fairness Act is an act that is being considered by Congress. The goal of the act is to give the states statutory authority to collect sales tax on businesses that sell products into the state, typically obviously through online commerce. The Marketplace Fairness Act is one of the most unique bills that's probably been submitted in recent years, in that it is really receiving bipartisan support. Just by way of example, it passed a Senate vote by a very wide 69-27 margin. As Governor Bill Haslam said, actually, at the time to the House Judiciary Committee, this discussion isn't about raising taxes or adding new taxes. It's about the states having the flexibility and the authority to collect taxes that are already owed. And that's really the essence of one needs to remember. Sales tax is an obligation that already exists. It's more a question of enforceability. In a recent turn of basically acceptance that this bill will probably pass, the chairman of the House Judiciary Committee, Representative Goodlatte, released several points that, in his opinion, should form the basis of the new law. So no longer is he saying that the law will not pass. What he's saying is what is going to be the form of the law. And with that, what he's saying, what those points focus around is that it will not allow the creation of new taxes. It has to be tax neutral. In other words, it cannot give anyone some type of unfair advantage or disadvantage. Point number 3 is really the critical one that goes to the essence of the Quill case, and that is that the laws and the compliance have to be simple and inexpensive. And bottom line is that it cannot take away from the sovereignty of states to create taxes. So with those 4 points, chances are, with those 4 points forming the basis of the bill, chances are that the bill will be passing. Will be passing. So the question is not so much will it pass, the question is just how soon and what will be its final format. So sales tax is here. Sales tax is coming to the online commerce. So the question is, what is the current business environment? Many businesses don't really don't comply, and they do so intentionally. They know the risk and they're assuming the risk. They basically essentially say, I'm not going to calculate taxes, I'm not going to collect taxes, and that's a risk that they're willing to undertake upon themselves. But the biggest concern is actually many of those businesses that think that they are complying. They believe they're doing what is required, and they're performing some kind of calculation on their sales and sending in a filing to a state where they think they're located. The problem, though, is that these businesses are being lulled into a false sense that they're in compliance. The reason is because these businesses underestimate the complexity that is inherent to sales taxes. And take, for example, shipping and handling. Shipping and handling is something that's determined on a state-by-state basis. Many states will impose taxes on shipping and handling. Many states will not. Some states will not. Many states will actually impose taxes on shipping and handling depending upon the item that's being shipped. Is it taxable or is it not being taxable? And many rules will actually differentiate on how the shipping is occurring. Is it occurring through common carrier, through the postal service, or using your own vehicle? Similar concept difficulties arise with regard to software, for example. You can purchase and download software, and it's taxed one way. You can purchase the very same software, same ship to, same ship from, same functionality, but instead of downloading, it gets delivered to you on a DVD. Whole different tax treatment, because then it's considered to be a tangible good. Or businesses that use tax tables. Many businesses, what they'll do is they'll take these tax rate tables that correlate between zip and a tax rate, and they'll use that basically to go and look up tax rates. But these tables don't have the logic that's required. They don't provide any guidance to differentiate between different items, the taxability rules of different items, tax rates, tax holidays. So many of these businesses that are using these methods, they think they're doing the right thing, and doing it really out of good intentions, but essentially, so they're being lulled into this false sense of compliance, essentially until they get caught. And the problem, though, is that when it does come up, they're on the hook not just for the back taxes, but also for the fines and penalties. So then the question is, what should we do? As we like to say, seek help. E-commerce is a technology-based environment, and technology should also be used basically to address these issues. Solutions that could automate the process, that will have the capability to address your sales tax needs in all the states. Even if you don't have the obligation to pay today, you want to make sure that the technology solution that you're utilizing has the ability to actually provide you with a solution across the board. Because you don't want to be in a situation where you're investing in a technology that you might need to replace simply because you're expanding into a new state. You wouldn't use that type of concept also, for example, if, for your shopping cart to process it. I mean, no one would you'd implement a shopping cart that could process transactions only in one state or in another. The solution needs to be fully automated. With today's solutions, basically, sales tax does not need to be a headache. With a good sales tax solution, the sales tax provider can basically take the entire process for you and deal with it, so that essentially there is nothing that the merchant needs to do other than just provide more supervision and management, and without any efforts in any ongoing maintenance. It needs to be easy to integrate. It needs to be zero maintenance. And the bottom line is also, one last point, it should also be cost effective. There's no reason for it to cost you an arm and a leg. So then the question is, how obviously can Exactor help you? So what is the Exactor Sales Tax Compliance Service? Exactor provides a fully automated, fully integrated end-to-end solution for sales and use taxes. Provides the business the ability to outsource any and all aspect of your sales and tax compliance needs in a secure, reliable, and highly accurate environment. So when we talk about end-to-end, what does that mean? It means that we can plug in and integrate at any point of the transaction where the merchant might need real-time calculation. In the e-commerce environment, we're talking about shopping carts, but we don't stop just there. We can also integrate into ERP systems and accounting programs, such as QuickBooks or Sage or the Mass products. We calculate the taxes in real time, so in a seamless environment, and as you'll see very soon, when David will demo the system, there's no additional buttons that the customer needs to click. It is transparent. It does not slow down the transaction, so it has zero impact on the smooth flow of the transaction. But we don't stop there. We're talking about end-to-end. So what will happen is we continue tracking the transaction. If there are any changes that are made to it, such as product returns, credits, discounts, personal exemptions, and we take all that information so that at the end of the month, we can take all that data, generate and file the tax return across the board in all jurisdictions. It's a fully automated, scalable solution that essentially provides you with a cost-effective manner and to outsource, as I mentioned, all aspects of the sales tax compliance needs. We talk very much about the accuracy of the system. What does that mean? I mean, when one looks at sales tax, it really, if it's a good, solid engine, it's very anticlimactic. You go through a transaction and you see the number at the end. And that's also why, as I've mentioned before, many businesses are lulled into using some type of simplified methodology, which essentially is they're doing a disservice to themselves. A good solid service, such as Exactor, what is it that's occurring underneath the hood? The first thing that we do is we pass the transaction, we pass the ship to and the ship from information through our CAS certified software. We have a address verification system that is certified by the U.S. Postal Service, so that we can actually clean up the addresses and verify that the addresses that are being used in the shopping cart actually exist, that they are deliverable and recognized by the U.S. Postal Service. The reason we do that isn't just because so that we can provide an AVS service, but actually the reason has to do with what we were talking before about the nexus. Where does the transaction occur? Many systems that are out there, they might use some type of shape, or some type of geoshape, basically, to be able to determine the location of the transaction. And they might use what's known as FIPS codes, or they might use latitude, longitude, some type of shape, with the most common being zip. What people don't understand and recognize is that the moment you're using a shape, you're actually introducing inherent inaccuracies. Two reasons. First of all, what's happening is you're taking the actual physical address that somebody is using in the shopping cart. People don't use just latitude and longitude coordinates, but they use an actual physical address. And then you're starting to introduce multiple conversions. Each conversion could lead to additional error. In addition, many people don't understand many of these shapes, like zip, are created by the Postal Service for the delivery of mail. This has nothing to do whatsoever with tax lines. And so we've got thousands and thousands of examples such as this one, where you have two next door neighbors, same zip plus 4 as you can see, 250 feet from each other, two different tax rates, difference of 1.25%. Or this favorite of mine from Colorado, same zip code, 5 different tax rates ranging from 4.25% up to just under 8%. So as you can see, using a shape like a zip or even a zip plus 4 is going to introduce inherent inaccuracy. And that's why what we do is we drill down to the actual physical address. Once we identify where the transaction occurs, we look at each line item, and very soon in the system you'll see how taxes are determined on a line-by-line item basis, because we look at each line item to look what is being sold and what are the different tax rules. As I mentioned before, there are different differentiators between different types of products. There are tax holidays, minimum, maximum thresholds. So what happens is that we look at the rules that apply to each line item to make sure that we are calculating the taxes accurately and correctly on a line-by-line item basis. As I mentioned before, standard tables and services just don't have this kind of built-in logic that are actually that would otherwise cause the inaccurate calculation of the taxes. And what many merchants don't understand is that the consequence of the failure is on them. Once the transaction is completed, the merchant does not have the ability to go back to the buyer, to the consumer, to actually collect any misapplied taxes. So then any taxes and any undercollected taxes, any fines and penalties, they're all out of pocket by the merchant. Additional compliance services that we provide is, as I mentioned before, is that we file the tax returns across the board. What that means is that we have the ability to actually be certified by many of the states to do electronic filing. So what will happen is our systems will connect straight into the servers of the state, and we will perform an electronic filing. Unfortunately, there are many locations, and many at the local level, where they do not accept electronic filing. But what we will do is we will generate the paper return, cut the check, stick it into the envelope. So from the merchant's perspective, from your perspective, we take care of the filing across the board in all jurisdictions. And in all jurisdictions, we're talking about hundreds of filings sometimes. And we have clients where we file several hundred returns for them every month. But we don't stop there. Also, because we have all the data in our system, we also provide a fully trackable and defensible audit trail. So what that means is that if there are any questions that come up by the state, what will happen is we will deal with that. So what happens is that our clients, they'll get a notice, an assessment from the state, and they will send it to us. We will take care of that. And many of our clients say just the fact that we actually contact the state and we're the ones who are on hold and have to deal with the bureaucracies of the states to address these issues, just that is worth our weight in gold. What we've been seeing in the last recent year, I mentioned before that the states and many of the locals are getting very innovative. We're also seeing it in this aspect. We're seeing that they are the ease of generating assessments has actually increased tremendously. So what's happening is that they are generating these notices and assessments, and what happens is that many, especially small merchants, they'll get a notice from the state that money is owing. The first thing they're going to do is they're going to write a check, because the government obviously can do no wrong. Well, from the state's perspective, if they have a 20 to 30% hit rate, they just made a lot of money. What happens is our clients will send us the notices and we will take care of it. And because we've got all the information, we've got all the reasons and justifications of how the taxes were calculated, we've got the proof of the filing, the proof of the mailing, the proof of the payment, posting, and we've got extremely high success in addressing these issues on behalf of the merchants. And again, because it's an outsourced solution, what that also means is that there is zero maintenance. So once the system is integrated, once the account is set up, essentially there is nothing that the merchant needs to do from the aspect of ongoing maintenance. They do not need to track tax rules. They don't need to track tax rates. We do all of that, update our systems, and it propagates immediately. On the international side, we also calculate international. So if there are any questions about VAT, companies that are that require that deal with international value-added taxes. We address that as well. We calculate across the board, as well as also have the ability of generating and filing VAT returns.